Good morning, everybody, and welcome to this episode of Derek Invest. I'm your host, Derek Miller. What we're going to talk about today, we're going to do some more updates. So, as we talk about all the time, I'm always forecasting. The point of the forecasting, I had some interesting questions yesterday because my mentorship starts tomorrow. Hey, if you're not in this mentorship program, I still have 2 spots available. If you are not in this mentorship program yet, meaning you have not paid me and then received the syllabus, you need to get in. My email, dmiller@prometheaninvesting.com. Head to my website, prometheaninvesting.com. Just leave off the D Miller. But if you email me, leave me your email address and your phone number so that I can reach out to you. I like to have conversations with everyone entering the mentorship to make sure it's right for them before they actually start the mentorship. So make sure to leave me your name, phone number, email address, and even best time to call. Otherwise, I can just, or at least what time zone you're in. Otherwise, I'll shoot you a Calendly link and we'll get you set up. But I've been getting some interesting questions. Most of them are via email and direct messages. But what they are is this: can I track your portfolio? Can't I just do what you're doing? Listen, everybody, that's not the point of these videos. That is not the point of what I'm doing here. Do I give you accurate price targets? Yes. Do I give you accurate date targets? Yes. But you're here to learn. So look, if I were trying to teach you mathematics, if I wanted to teach you mathematics, can I not do mathematics in front of you? How would you have any idea how to do algebra unless someone walked you through an algebra problem? I want you to think of this live stream that I do in the same way. Look, this is me demonstrating how to do it. The problem is, none of this is by design for you specifically. And when you invest, it needs to be for you specifically. Okay. You have your own personality. Let me tell you how the market works. The market is a business, it has structure. There are certain mechanics that occur. Now, a lot of people will teach you mechanics, but really mechanics mean nothing because not nothing. Wait, let me take that back. Mechanics aren't the driver of the market. Okay. I didn't mean that. Mechanics mean a lot. But what mechanics do is elicit certain behaviors. They elicit certain responses. There's the people that run a business, there's the people that participate in the business, and then there's the buyers of the business. Okay? So, you have to understand that the mechanics are utilized as a manner within the structure of the business in order to elicit an emotional response by the active participants. The active participants create market sentiment, which everybody is familiar with. Market sentiment generates cash flow and trading activity, which dictates price. How is that price action dictated? Through emotional responses? Simple. If there's one group, institutions, that control most of the supply, most of the stocks, if you're trading in the stock market, most of the bonds, if you're in the bond market, most of the oil futures, if you're in the oil market, so on and so forth. If I control that supply, I control price. How? If I want price to rise, I pull supply off the market. I buy shares at lower prices. If demand remains constant and I remove supply, price rises. When I want price to fall slowly, I leak on supply. I put a little more out there, and that will slowly drip off price. If I want a market to dump, I dump shares. I sell huge orders, huge blocks, and that will drive price down. This is considering that demand is remaining constant. Now, I don't want demand to remain constant. If I want to buy a lot more shares, I want to dry demand up from fear. The best way to create fear, especially with someone that does not have a disciplined investment plan based on rules created for themselves, is to create fear or greed, FOMO or fear. If I create fear based on price action, you'll sell your shares, period. You think you won't, you will. If you don't know that about yourself, you haven't been doing this very long. If you think that you're going to buy and hold, no, you're not. Do you know how many people in their 50s right now tell me they're buy and holders, and I'll review a portfolio with them? Or at least when I was a financial advisor, I would review portfolios. And let me tell you something. I met one buy and holder in my entire career, which stemmed about 2 decades. And that's not a joke. One person that wasn't buying and selling at all the wrong times. And I mean that, all the wrong times. You want evidence of the buying and selling of all the wrong times? Here's a fact for you. From 1990 to 1999, the S&P 500 averaged about 11%. So 11% per year in the S&P 500. The average investor, the average person investing, averaged 1.2%. Why? They can't control their emotions. They buy and sell at the wrong time. They get fearful and they get greedy. What I am trying to teach you here, what I am trying to demonstrate to you, is that there is a structure, there are mechanics, and it does create emotional reactions, which drive market sentiment, which ultimately drive market price. I hope that's what you're here doing. Let me throw out my contact information one more time. Actually, here's my Twitter. You can actually buy into the mentorship program directly from my Twitter. I know that seems like it's a bot Twitter, but I've never changed. I have never changed the handle there. Derek Me 752-63605. That is me. You'll see a blue check mark. It's a picture of me and my wife as the profile picture. You can do that. You can find me on LinkedIn at Honest Trader, Honest as Trader on LinkedIn. And you can also email me, of course, at dmiller@prometheaninvesting.com. Now, let's get into it. What are we going to talk about today? We're going to do some updates. What updates are we going to do? Well, we're going to look at the S&P 500. We're going to look at NVIDIA, First Solar, NextEra Energy, ARM, Levi, Crowd, Google, Microsoft, Amazon, and Meta. I don't know if we'll get through them all, but we haven't looked at AI in a while, and we haven't looked at it since we've had this rebound from those lows, which is precisely what I forecast. When we were down at the absolute low, I forecast this rally and the QQQs to 490. Feel free to look that up. You don't believe me. 423 to 490 is a heck of a move. So if you missed it, you should have been paying attention. And again, the reason I mention that is because this is a forecasting system. I teach you that forecasting system and help you structure an investment plan based on you, which is the only way it's ever going to work, my friend. That's the only way it's ever going to work. All right, I'm going to pull this down and let's start moving. Let's look at, we broke down Google yesterday. Google is the leading index, far more important than the S&P 500 right now. So let's jump in. We'll look at NVIDIA first, and then we're going to jump into, because I've covered NVIDIA, and what I'm trying to do is go back and give some updates. Where is it here? Sorry, I'm just looking for there it is. Let's go ahead and share that. Okay, let's jump into NVIDIA. Let's change this back to a monthly. NVIDIA, NVDA. There we go. All right, what happened to NVIDIA? Well, I can't remember what target price I had in NVIDIA. I think it was 105. It obviously far surpassed that this month, and it hit 90. But we have talked about NVIDIA substantially because it has gone parabolic, and we do know how anything that goes parabolic ends. The key is, when does it end? That's what everybody wants to know. I can tell you that when that time comes, when it is coming, I will forecast it for sure. Right now, we're doing a little breakdown. Do we see anything here that looks suspicious? No, not really. In fact, there wasn't a lot of purchasing down here at 90. So is that a little concerning? Well, at least price rebound, but I will tell you the fact that there was no purchasing. And if you notice here, what do we always talk about, everybody? Gaps. And a lot of people say, oh, that gap didn't fill here, that gap didn't fill there. Well, you have to know how gaps work. So this particular gap, if you look, is on extremely high volume, extremely high trading activity, and had price follow through, which means what, everyone? If you know the system, it means this will take time to fill. A good deal of time, as a matter of fact, which it did. This was May 23rd, and this was not until August 5th. However, if you were intelligent and realized that this gap would fill and that you could have a shot at that price again, was it worth it? Most certainly, because you didn't sell at 140. You know you didn't. You wrote it back down to 90 anyway. You rode it to 90. If you'd have bought, you're sitting at 130 now. That is almost a 50% move. Was it worth the wait of a few months to get a nice, easy 50% move on very low risk? I would say it is. Let's zoom in a little bit now. It doesn't look like there's any trading activity or volume, aka cash substance, really. That's very. I'm going to remove that drawing, although it is important. As you can see, it filled right there. Gaps fill everything. When you're involved in a position such as NVIDIA that has so many large institutional players, if there's going to be a gap from 94 up to 101, 102, and it's not going to fill, you don't know investments. There is not a chance that you're going to gap through 7 or 8% and it's not going to return there. 1 hour, what do we have here? Anything? Well, it looks like there is a gap down here at what? What is this? This is 110. You're at 124 now. This is definitely a point of interest. Why? Because this chart fills gaps. This chart fills gaps, period. It's moving efficiently because it is in by institutional money. Institutional money investing in a specific is not going to bypass not 1%, not 0.5%. It will return to that area. So let's zoom in a little bit more. As you can see, every gap fills. Look, gap up, filled. Look, gap down, filled. Retest each time. Look, gap up, filled. It retests price. There's no rally. Gap down, filled, retest price. You have a gap here and you have a gap here. So right now you're looking at 110 saying this is an interest. We're on a 30-minute of interest. So let's zoom in a little bit more on a 15. Here it is right here. Gap right here, revisited immediately. Reasonable fall. Can that take to fill pretty soon? Not going to show up on a. We're heading into fall and out of summer, so we're kind of working off a hybrid model when it comes to time frame. Traditionally, a 5-minute chart would be 2 to 3 trading days. A 15-minute chart would be 3 to probably 6 trading days. 10 days. So let's go ahead on September 4th. If you're familiar with how to break down time frames, that makes sense to you. If you're not, you should be in my mentorship course. And remember, the only way to get into my mentorship course is to email me at dmiller@prometheaninvesting.com and submit your email and phone number so that I can contact you and we can discuss you a little bit, what you're looking for. Make sure it's truly a fit for you. The most important thing to me is that everybody gains value. If it doesn't make sense for you, I will tell you. I assure you, I am not looking to fill up mentorship programs. I am looking to help those that seek the truth, that seek the answers. I don't even mind if you're a naysayer when you start, as long as you realize that what you're doing isn't working for a very good reason. I mean, if you're studying mechanics and you're saying, why doesn't this work? Well, it's real simple. Mechanics don't dictate the emotional reaction that the humans are going to have to those mechanics. Are mechanics important? Yes. Is understanding mechanics important? To a degree. I mean, you want to understand notionally how mechanics work, right? Like, it's important to know if the guys that are creating the market are buying and selling. How deep into that do you have to get? In my personal opinion, not very deep. But look, that's my personality type. I don't need to say, hey, they're buying X amount of this and X amount of that. There are a lot of guys out there that will teach you exactly how to do that, by the way. What happened? Did I remove volume? I think I did. Let me remove zero indicator. Yeah, I remove volume. Let me go put it back. Anyway, there are a lot of guys out there that will teach you how to do that. If that's of interest to you, by all means, I mean, there's absolutely nothing wrong with understanding the mechanics that are underneath you. For me, do I need what the mechanics are? I have been doing this for 25 years. I'm a little bit different than your average bear, right? The average guy getting started. So let's look at First Solar and Next Era Energy here. So that was NVIDIA. Let's look at First Solar and Next Era. All right, First Solar reapproaching the highs of 07. Actually, their high might have been 08, huh? May of 08. Wow, that's shocking. The market was rolling over in May of 08, by the way, but solar was going to change the world, and it was changing the world. Now, you tell me that you can't tell that this weekly bar of activity was institutional money. A price run from 200 to 280 in 1 week on some of the highest trading activity, aka volume, aka cash flow on this chart. Now, for those of you that experienced FOMO right there, and you said, "Oh, I got to get in that. I'm missing the boat." Listen, this is your breakout price, all right? Your breakout price is 230. I would call your breakout price probably 223 right there. You burst through the breakout price, you will get a second chance. We discussed this yesterday. This is your second chance at that price. Let me do that and that and that. Price will return to whence it came. It will revisit the breakout price. You will have a second shot. Do you see that? That will happen over and over and over and over again with any position that is being bought and sold by institutions, which are the only positions we are interested in. Why will that happen over and over again? Because they do not like to buy at higher prices. They sell at higher prices. Right? Now, what about down here, Derek? What about down here? It didn't touch. Right here. Okay, so here's your low. What's the low there? The low there is 129, and the high here is 123. But you said it always comes back. It always comes back. Odds are it will. I'll get into that. The fact of the matter is, as price, there was how low volume dried up. See that? There's nowhere left to go. Any purchase more stock. Look at this. This is the low prices. Look how low the volume is. There was nothing else to buy. There was no reason to come all the way back down here. And my system would indicate that immediately. This would not be an issue. I would say your average volume right now is, I'm going to draw a blue line, even though it's going to be confusing with the other blue lines right there. At these low prices, look, you got a nice volume bar there. You have some trading activity. Price runs up. As you can see, here's the sell-off. We're going to sell it off and bring it back down. But look what happened when it comes back down. Look at this. There's just no volume. It's gone. Look at that. It's gone. All right. There was no reason to drive price any lower. Okay, because there's nothing to buy. All right, let's zoom in a little more onto a daily chart. And I'll bet you some gaps are going to appear that we didn't see. Not even. Look, there's not even any gaps through there. They just drove price straight up. But I'll tell you what should poke you out in the eye. What should poke you in the eye about this chart is this right here. This was why it was did, and it was accurate. Of course, this is as obvious as it gets. It doesn't get any more obvious. Folks, identifying institutional footprints is not a difficult thing to do. It will stick, it'll poke you out, like it'll poke you in the eye, just like this. It's not hard. Each chart is a standalone chart, meaning it carries its own meaning. Now, this chart is its own meaning. So what we're looking here is we're looking at that volume, and then price drives down, and then they gap it down. Gap prices down after price has already fallen, and this down from 305 down to 214. This is a big percent. We let it to 237, and then we gap it down. Why does money generate fear? Why are they fear? Because they're looking to buy more supply. What does that mean? That means they want prices to run higher. As you can see, they gapped up. Why? They need to generate selling. That's what this bar right here that I'm on. That's a lot of trading activity. That is activity for this chart. 10 bars on a chart that has 100 or so bars and a volume. That's 1 of 10 of the highest trading activity, and it's at a high price for this chart. This chart is a standalone chart. So they're looking to generate excitement because they're going to drive price back down. They want to see if they can pick up more supply. That is the goal. So now we can say to ourselves, okay, it looks like the long-term goal of this particular position, and we don't even care what it's called, this particular position is to drive prices higher. And they're sinking price quickly, aren't they? Why do we went through this? You sink price quickly to generate fear. Why do you generate fear? You want retail to sell. You want the less knowledgeable hands to get scared and sell, period. Zooming in, is there a price target on here that is worth anything? It's filled. Now that this gap has filled, and we can say that price should move higher, you figure you're going to revisit the breakout price here, right here. And First Solar is a buy. Take a picture. I'm not always going to give you price targets and price date on everything, although there is a very obvious one on this chart. There's a very obvious price target and price date. That is what my mentorship and my one-on-one coaching is all about. I prefer the one-on-one coaching. Okay. I think the one-on-one coaching makes more sense truly for everybody. I don't think there's anybody that is not true for. It does not matter if you're just looking to avoid the large, one too many E's there. We're going to look at next era. It doesn't matter if you are long-term and you are just looking to avoid the massive bear markets. The fact of the matter is that you most certainly should be taking my one-on-ones. And remember, the only way to reach me is dmiller@prometheaninvesting.com, or to go to my website, which is prometheaninvesting.com, and fill out my contact form. If someone's telling you that you can reach me any other way, they're a fraud. That is not the case. What do we see here? Well, we see a lot of buying right there. And that is at a low of $47. I remember that. That was on the 5th. Oh, no, that's October of 23. I'm on a monthly. Oh, gosh, my bad. But we have been calling for next era. I believe I have a price target on here from a couple months ago. I had 2 price targets, and we have hit the first price target, and now this is the 5th. Yeah. It didn't know. See, it got crushed. No, that's still October 23. I'm on a weekly. God, I gotta really start paying attention to what I'm saying. This is why I do take pictures of charts and put up price targets and dates, because I move through this stuff really fast. Gap filled. Gap filled. Let's zoom in a little bit more. Looks like volume is drying up coming into this high area here. That can be a problem. Let's zoom in a little bit. Volume is drying up. It probably is going to need to generate some more energy before it has the ability to break out. It might be able to break out. It looks like it's going to revisit 76 before it does that. Yeah, it looks like it'll probably have to come down into here. They're going to have to. And when I say they, I'm talking about institutions, the people, the strong hands, the people in control of the market, the people that control the mechanics, control the supply, control the demand. Maybe even 79 will be enough. It's possible that 79 is enough. There's not really a lot to say about NEE. My previous forecast is still very accurate. We'll look at ARM and Levi next. And then we're going to get into some of these AI companies. So if you're waiting for those, hang in there. We're going to get to them. Let's go here to a month. There we go. We're going to go. What did I say we're going to go to now? ARM and Levi. ARM was a fantastic one because I had that. I think it was up at like 155. Forecast that down to 105. It actually at 90. I'm going to zoom in a little bit more here. Let's see if we have any revised forecast for ARM. Did it come and fill? It came pretty darn close. What's volume look like? So it's retested twice. It found some supply there. 4 hours. I'm good for anything if I need to revise a forecast that I made, or if everything looks the same. And for ARM, I don't see anything here that's poking me in the eye. Let's see. Boop boop. Now I'm not going to do anything with ARM here. What I say, Levi. We're going to take a look at Levi. Remember, everybody, I'm not here to help you just copy what I'm doing, or have you mimic me. I'm here to teach you. If there is nothing on a chart that's teachable, I can give price targets on 90% of the charts I look at. But if there's nothing teachable, I won't do it. So, I mean, I am here to teach. And my mentorship program is the greatest way to learn. My one-on-one coaching is the best possible way to create an investment rule book for yourself based on the 3 pillars of investing: investment management, risk management, and cash management. You can see the price was driven up here. This was actually selling, not buying, which is why we were turned down. This is probably the buy the dip mentality. There was some follow through. It's revisiting on Levi. Let's go down to a daily. Aha. So we can see that we have this is interesting, huh? There's a price target there. That's like 22.50. I would say 22.50 is probably where I would lay out the target. I am not a greedy man. It looks like there is a gap here down at 18.30, which is really close to where you sit. So you have upside and downside, which is what I like, because that reduces risk down to a minimum. There was follow through with price here. Would we go from 1950 to 1650? $3, 15, 13% on that amount of volume. It should have probably been a lot more. This gap down right here. Okay, guys, this is a good lesson to learn. This gap down, if this gap down would have had real follow through right here, this would have been a warning sign of a plunging stock. However, it didn't. Gap down, a hunt for supply. So we're going to be running back up here to this 22.50 mark. Let's see. Let's try to see what date we have here. Remove. Let's go. Let's take a look at a date here. 1 hour. Oh, that disappears on 1 hour. Here's a gap down, run up. Here's a gap. So you're looking at you're probably a month out on a 4 hour. You're a month to 6 weeks out. You should return down here to 18 first. You should return to 18 first, but if you don't, it's no big. But you share. So let's see if that 18 sticks on a 15-minute chart. That takes us out 2 weeks. It does not. It disappears. Okay, so let's have a look here. Let's go like that. All right, so let's go here, and we would say that. Whoops. Hey, I love a smiley face. I should put that up right here. And you're probably looking at 18. So if you're building, it's a good thing. What is it? Right? I don't know if I dated. That's funny. Sometimes I get rolling and I forget if I've dated my stuff. I try to date now because people initially are going, well, when is it getting there? When is price getting there? And they're kind of like aggro about that. Here we go. Because people want to know when. I mean, how can you say you have a system that works? How can you say that you help people design? And that's really what I do, is I help people design their own investment and trading rules. Target date, we're going to use this as a 9/4. In my one-on-ones, and I also teach you my system. But a lot of people like to work from, if you believe that the mechanics rule, if you think mechanics determine price, then you'd be the same kind of person that would think fundamentals would determine the price of a company, right? So if mechanics determine an index, then fundamentals determine the price of a stock. Now, if you believe that, I can help you disprove that very, very quickly. It is not mechanics, it is the people. The people drive price. People drive Peloton up to 180, and now it sits at $2. There's no fundamentals that did that. All right. Same thing goes for Tesla. Same thing goes for First Solar. Same thing goes for Krispy Kreme. I can go on and on and on. Oh, wait, I want to do a 30-minute chart. I'm going to give or maybe that was an hour. I want to know that was a 4-hour, which means it's like 2 months. Yeah, we're gonna go here and we're gonna go there. 8, 27, 24. And that's not to knock fundamentals. Fundamentals are for buying companies. If you're actually buying the company, and that's not what stock is, contrary to what you're told, you're not buying a company. Warren Buffett isn't buying stock, he's buying companies. So if you start comparing yourself to Warren Buffett, then you start talking to me about billions of dollars to buy companies, because that is reality. Let's go ahead and do 2250. And then if you start telling me you're a buy and holder, I can tell you that 99.9% of the time you are lying to yourself, or you're pretending you haven't done what you have done, which is sell at lows and buy at highs and get excited every time there's a new stock, a Nvidia, a Krispy Kreme, a Tesla, and you have, let's see, 2 months. So let's go to, I'll go to 10/27, 2024. It can actually, this can happen quicker, but that's okay. So now you have an upside target and you have a downside target on Levi. And that is a great way to reduce risk. Whoops. If you can find positions where you are defining your upside and defining your downside, and if you're building into both positions simultaneously, if you don't reach a position, and with my system, the likelihood that you're not going to reach those targets is very slim. Because I only look at companies that are being bought and sold by institutions. So price does move based on mechanics to a degree, and price will return. So let's take a look at Google, Microsoft, Amazon, Meta. They're going to probably look pretty similar. So we may not go through all of those, but I might go through all of them. Let's just see what they look like. Google. Okay. As you can see, nothing hitting you in the eye. I like the buying going on down here. You have not returned to this breakout, but you've come darn close to returning the breakout. Your rally off of the 5th is next to nothing. So strength there in Google since the drop on August 5th, which is weakness, obviously. And it did. Gaps are filling something interesting for you. Months, but here's something for you. You have a gap that this position is definitely looking to the downside, right? It's definitely looking to the downside. Let's throw that up. You're not getting a price target out of this one. I could give you price and date targets, like I told you, on 90% of charts. This chart, most certainly. But I am here to teach you that this works. I am here to show you how this works. To understand fully how this works, I advise you to take some one-on-one coaching from me. Email me dmiller@prometheaninvesting.com. Name, phone number, email, address. Or go to my website, which is prometheaninvesting.com, and fill out my contact form. I'll get in touch with you. Here we go. Go to 4 hours here. So we do have a price target above us as well. Look at that. There is a price target up there, but I have to tell you, this doesn't show strength. This does not show strength. This shows weakness. Does that mean this won't fill? No. Does it mean it will fill first? Probably not. Looks like this particular company needs some more energy to get up there. Let's see. 15 minutes. There we go. Oh, there's some ugliness. Let's go on to a 5 minute. Anything happening in the next week? Nah, nothing definable. Let's go ahead and move on to Microsoft. When you work with me one-on-one, by the way, you know, we run through positions. We always do price targets and price dates because you're learning. I can't teach you algebra if I'm not doing algebra. Now, can I? How will you learn it? Okay. Let's see here. Microsoft. Let's zoom in here a little bit. Okay. Not a lot of strength there, lack of volume. So as you can see, we're losing some of the excitement over AI at the moment. We are. Some of that market sentiment, some of that excitement is disappearing. And when you look at a stock like this, let's look at Microsoft here. Clearly, this is a company that participates in with big institutions. Big institutions absolutely participate in this. And you can see that as your previous breakout price. It has kind of been revisited, but it hasn't been in a strong way. And I would say it probably needs to be. And that might be why it's showing some weakness. Who knows? So we were already at the daily. I'm going to move back down to the daily. I wanted to point that out to you. 1 day, 4 hours. You'll notice I jumped from 4 hours to 1 hour. I don't even know that I need to look at the 4-hour chart as much as I do. I just like it as a quick pit stop. Okay, you have gap that fills. So this is definitely generating fear. There's some purchasing right here from 420 to, what is this? 395. This is activity worth noting. This is definitely activity worth noting here. All right. You can see how that stands out on this chart. You can see how this trading activity stands out. Now, is 420 to 395 a big move? 25 points on 4, you're looking at 5%. For a stock like this, no, not really. It's not a small move, but it's not a big move. Let's zoom in a little more. 30 minutes. Anything? Well, you have a gap here. So that's worth noting. You have a gap here at what, 407. You're right within striking distance of that. Not a very big move. Yeah, there's nothing here worth noting except for that it is weak. It is weak just like Google was. Google was weak too. Microsoft, what I say? What's Amazon look like? I mean, I don't see anything there that tells me. I go, well, that's a pretty strong rally off that August 5th low. Let's zoom in more. Gap filled. I'll bet you if I go back and we take a look at gap filled. I'll bet you if I go back and take a look at my last live streams that those gaps were identified as target prices with target dates. I'm actually going to go back and look because there's no doubt that I missed that. Here's another gap which looks like filled this morning. Filled. As you can see, it's filling gaps. It is looking weak. Those gaps are filling to the downside. They are filling. Oof. Yeah, there's weakness in this one too. There's really no real reason to zoom in. I mean, the reality is you filled. See? You can see this price back here and this price here. Put my crosshairs right on it. Boop. Touch and filled. Look like they found some supply too. They being institutions, more knowledgeable hands. Strong hands of the market. Let's see if 5 minutes tells us anything. 5 minutes simply tells you that there is buying occurring this morning. Pretty simple. Let's see. What else do we have to look at here? But NVIDIA, First Solar, ARM, Levi. We can look at Crowd and Meta. Let's do it. Why not? Crowd and Meta. Let's take a look at Crowd. Crowd's been a fun one. All right. Monthly, weekly. Tell you what, we are going to look at Crowd and Meta tomorrow as part of our update. I think that's good for today. I think that's long enough, don't you? Okay, VIP mentorship starts tomorrow. All right, it will start tomorrow, whether you're in it or not. 2 spaces left. Email me at dmiller@prometheaninvesting.com or go on to my website, prometheaninvesting.com, and fill out the contact form for that mentorship program. Listen, if you email me, leave your name, email, time zone, and phone number so that I can reach out to you. I want to make sure the mentorship program makes sense for you, and it's going to, you're going to achieve the goals you're looking to achieve in the mentorship program. And then also I only have 5 slots, so there's 2 slots left now. So if you are interested and you do plan on joining the mentorship program, reach out pretty immediately. We're starting tomorrow. Okay. That is the mentorship program. If you are not following me on Twitter, that is where you will get a lot of information. It is Derek Me, as in Derek Miller, without the LLER. So Derek, DEREKMI 752 63605. I've never changed that handle. I probably need to change that to Derek Invests or something that actually makes a little bit more sense. I do have a blue check mark. It is a picture of my wife and myself there, so you can find me on Twitter. And then on LinkedIn, it is honest-trader. Again, there's my email, dmiller@prometheaninvesting.com. Please remember, if you're not good up here, you're not good anywhere. All right, if you're having a hard day, get outside, see the sun, go for a walk, smile like an idiot, fake it till you make it. If you smile like this long enough, it'll be real. I promise you, it will be real. You know, back in my days of cold calling, I was smiling and dialing. And right, those are fun times, and also they were lots of grinding, lots of hard work, lots and lots of hard work. Not that that's changed much nowadays; it's just different work. In any case, I'm glad you joined me. I hope you found this informative. If you are interested in the mentorship course, make sure to reach out. One-on-one coaching is what I always think is preferable. You will design an investment rule book for yourself, made for yourself, based on the 3 pillars of investing: investment management, cash management, and risk management. At the same time, you will learn my system and how it works, so that you can identify institutional big money, the more knowledgeable hands movements within a market, and learn how to mimic those movements. At the same time, you are going to learn how the structure and the mechanics of the market. You will learn about the structure of the market, the mechanic of the markets, and how that influences investor behavior, which is the ultimate driver for any stock price. I can prove that time and time again. So you will learn my system as well. You will also come up with an investment rule book for yourself. Remember, every day above ground is a good day. And thank you.